Okay, so can you guys see the screen now? Let me get a confirmation from everybody. So it seems like Grant's the only one who can see the PowerPoint. Okay. Interesting. That's very interesting. Let's see. Okay, so this is what I'm going to see. So when you guys see, Daphne, when you say the home screen, um, you mean like where you see like the apps and stuff, or do you just see stars? Oh, yeah. Okay, yeah, that's the PowerPoint, Daphne. That's what I meant. So you guys can see it. You guys can see the home screen. Oh, all right, guys, come on now. You guys are cracking me up, and we just started. All right, so yeah, this is the screen. This is the PowerPoint screen. Yeah, this is next level. So we're good to go. All right, you guys were scaring me for a second. Um, all right. So let's go. Welcome to Next Level Trading, guys. My name is Brian, your host. Very excited to start this class getting this class going. Very excited to, get you guys on the right track. Now, we're gonna go and go over about Forex. We're gonna, talk about the basics about Forex. None too much into detail for this first session. It's really just to get everybody familiarized with Forex and what it is. I do know we have a couple of experienced and novice traders here in the room, so we just want to get everybody caught up. Now, I will have pauses where I will ask any questions that anybody may have, and you guys can just ask any questions in the drop box, and we can go from there. But so let's get this thing started. All right. So what is Forex? Forex is the relative value of one currency versus another, exchanging one currency for another over a period of time. And so let's say that, um, let's say you're in Europe, right? And from Europe, you go to the United States and you have with you 300 euros at the time. And so, you have 300 euros and you go to the US. I don't know if anybody has ever traveled abroad, but when you do, in the airport, there's these kiosk machines. There's these machines where you can actually exchange money. So like if you're coming from Europe into the United States, there'll be a machine in the airport where you can exchange your money. And so pretty much what Forex is just the exchange of money. So if you have 300 euros and you come to the US and you want to exchange that euro to US dollars, you go to the kiosk and you exchange, the 300 euros, depending on that current exchange rate, will determine the amount of money you'll get. So let me just pull up a drawing board real quick. One second. Let me put it to where you guys can visually see what I'm talking about. All right, cool. So let's say you come to the United States, right? And you have 300 euros. Now, with that being said, let's say that the current exchange rate is at $1.50. So what that means is that it takes $1.50 to give you 1 euro, correct? So you have 300 euros. 300 times $1.50 gives you $450, right? So you now have $450. You had 300 euros. You exchange euros into dollars at the current exchange rate of $1.50, which came out to be $450, correct? So now you have $450 in the United States, and for some reason, let's just say you came and you never spent that $450, correct? You just lucked out. You were on vacation. Your family looked out for you, and they paid for everything. So you never even touched that $450, and you're looking to go back to Europe, right? And so when you first arrived to the United States, the current exchange rate was at $1.50. But when you're leaving to go to Europe, it is now, let's say, $1.40. And so what that means is that the exchange rate had dropped. At first it was $1.50, now it's $1.40. And so it takes less amount of dollars to equal euro, which means that the strength of the euro has dropped. And so the strength of the euro has dropped, and now the strength of the dollar has risen. And now that the dollar has risen, you now can make profits. So you have $450 worth. You have $450, and now you're looking to go back into exchanging them into euro. With that being said, the exchange rate is now $1.40, which means the dollar has strengthened, correct? So all you really do is just multiply $1.40 times you'll multiply $1.40 times $450, and that will, or actually you'll divide 450 by $1.40, and that'll give you the amount of euros that you have, which is 321. So let me just write it out for you so you guys can better see it. $450 divided by 1.4 gives you 321 euros. All right, we're here, we're 1.5 1.5 times $1.50 gave you $450. Okay, cool. So now you have 321 euros. You left Europe with 300 euros, and then you came back to Europe with 321 euros. So that means you made a profit of 21 euros, because if you subtract 321 from 300, you get 21. And so what you pretty much did was yeah, correct, Grant, you're right. So you just made 21, you just made a profit of 21, because you bought that currency, you held it, waited for the exchange rate to drop, and when it did drop, you made profit. And so that's how Forex pretty much works. Um, so one thing you want to do is kind of think of it as like, think of it as, let's say, when you're looking at these pairs, right? Let's say you had Euro USD, correct? So we got Euro USD, And whenever we have Euro USD, we always want to know that the bottom is our quote pair. And then the top is always going to be called your base pair. Okay. And so let's say that, the euro strengthens, right? Let's look at the base pair. Let's take a minute and kind of evaluate the base pair. How I like to think about the base pair is as in sports. Everybody's familiar with football, correct? Everybody understands, or actually, basketball, football, because I do have some people. Okay, awesome, awesome. So in football, think about the base pair as the head coach. Okay, so you got a head coach in football, and if the head coach is doing bad, the team's gonna do bad, correct? And how that plays out on the chart is that this pair would be in a downtrend. So if that base isn't performing, let's say the euro weakens, that whole pair will actually drop. It'll go on a downward trend. Let's say that you got a head coach and the head coach is doing very good, and they're performing well. In that case, if we're referring to this, the base being the head coach, and the base is doing good, then that pair is going to rise. So this is how I like to think about it. If you actually pull up a chart, let me pull up a chart real quick. Let's see. Okay, cool. All right, so here we have this pair called we have a pair of the Australian dollar versus the Swiss franc, and as you can see, it's on an upward trend for now. So that means because it's going up, that means that the Australian dollar is strengthening. That means it's doing a good job and it's strengthening. Now, you can see the arrows that's guiding it on an upward trend. So that means that it's strengthening. Let's say that, for example, if it was going down as it is in this case, so if you follow my mouse, you see that the pair is actually dropping. It's going down and down. Um so yeah, so like Grant just mentioned, the quote is like the players. That's a good point. And so, you got the Australian dollar, and you see this downtrend. So that means that the Australian dollar is weakening. That means that, let's think about the head coach. If the head coach isn't strong and the head coach isn't, up to par, is doing a bad job, then that team is going to do bad, right? So the team in this case is the pair. The pair is going to do bad and it's going to start to drop. And so this is what you're seeing here. This drop is representing the Australian dollar weakening. And then this rise is representing the Australian dollar strengthening. And so this whole pair, depending on whether or not it rises or drops, all is based on the base pair, which in this case is the Australian dollar. So that's a little bit about how that works. Just to go over it real quick. And so Forex, compared to the stock market, has a lot much more volume. It's a $5 trillion market. As you can see here on the screen, the other markets don't even compare to how much money flows within the Forex market. And it's good because the more money there is in the market, the more money we can make. The difference between Forex and the stock market, one can say, is that Forex is open almost 24 hours, 7 days a week almost, but it the only time it's really not open is on Saturdays. So it opens Sunday evening and doesn't close until Friday afternoon. And then Saturday is like the day, if you're into crypto, you can trade crypto, but if you're not, then you're pretty much not trading. What you're pretty much doing is evaluating the market for next week and getting ready to make your trades and your evaluation for next week. And so as you can see, the volume in the forex market is, I mean, crazy, night and day compared to, you know, the stock market. And so, you know, before I go on to the next slide, oh, I'm sorry, it went. Before I go on to the next slide, does anybody have any questions from now? Is everything making sense? Awesome, awesome. So, all right, cool. So let me continue on. So now in Forex, we have what you call pips, which stands for percentage in point. Now, percentage in point is the smallest price change that a given exchange rate can make. An increase or decrease in pips can represent a profit or a loss in your trade. So in this example here, looking at EU, you can see that the pips is quoted to the 4th decimal place. So, you know, we have not 1, not 2, not 3, but 4 decimal places. And this last decimal place is kind of how you account the amount of pips. This is, you know, the change of this last decimal place will determine how many pips you move. So if you follow me here to the right of the screen, you'll see, let's say we started at $1.50, and you know, that's our start price, and the end price went all the way to $1.54. So at first it was just 0. The 4th decimal place was at 0, but now we increased up four pips. So that was a 4 pip movement. Okay, and so, you know, that's pretty much how you do it. You just add if it goes up, and if it goes down, you pretty much subtract. So this next example, you have the start price, which is at $1.50, and then the end price is at $1.49.94. So, you know, we had a negative 6 pip movement, because if you subtract 6 from $1.50, you know, you'll get $49.94. And what you want to do is, I kind of like to think about this as thousands. So instead of $1.50, I'll just say 5,000. And you know, if the end price dropped 6 pips, well, just subtract 6 from 5,000, and that gives you 4,994. So, you know, that's an easier and simpler way to kind of, you know, measure out the increments of how this works, because it can be confusing at times. But as long as you have that $1,000 marker in your head, it'll be able to clear things up and make things a lot more easier, you know, to understand. So that's kind of how I do it. That's how I like look at the charts and measure the increments. So we're gonna move on to, you know, another pair, which is that includes the Japanese yen. And so if you go back, you notice that this pair was quoted to the 4th decimal. But if you come here to the Japanese yen, you see that's only quoted to the 2nd decimal, right? So that's the thing. All pairs, you guys might want to write this down, all pairs that include the Japanese yen will be quoted to the 2nd decimal. Okay. Also, other pairs or other, you know, currency and commodities that are the same way, that are counted the same way to the 2nd decimal point, would include gold, oil, Brent, and gas. So they are also quoted to the 2nd decimal, you know, decimal place. And, you know, going in detail as to why that is so, that's a whole different discussion that I'll probably talk about later on. But just understand the difference. So like, as you can see, you know, this EU pair is quoted to the 4th decimal place. But if you come to this pair that has the Japanese yen in it, it's only quoted to the 2nd decimal place. And that's really because of how the Japanese yen is really, structured in terms of, um, you know, how their currency works. So that's the only difference. Um, so if you look here on the right hand side of the screen, you will see that, let's say we had a start price of $77.60 for the Japanese yen, and it went from, let's say it went from $77.60 to $77.64. That was the end price. Well, one can say that that was a 4 pip movement. It went up 4 pips, and vice versa. Let's say that we started at $77.60 and it dropped to $77.56. Well, the pip movement, we can all agree that the pip movement would be -4. So that's pretty much how you want to look at it from that perspective, in terms of the decimal places, when it comes to Japanese yen, or versus other pairs and stuff. They're counted differently, but the same logic is similar. So in terms of pips, so let's say we will move on and take it even more further and talk about pippets. And so pippets is actually, a way where, or actually, before I continue, does anybody have any other questions so far? Any questions? Awesome, awesome. All right, cool. So we're gonna take it a little bit further and add another decimal place, and that'll be the fifth decimal, which is called a pipit. Now, I'm not gonna lie to you. I'm gonna be straight up. This is rarely ever used. I mean, the only time I really use it is when I'm probably only used it one time, twice, and that's just really just a precision. It's really if you want to get even more precise, but that fourth decimal place is really going to be what you use to count the amount of pips, that is taking place. So, um, and so like the fourth decimal place is really where you want to pay attention to in terms of how many pips it has moved. There's always going to be that extra fifth decimal, but 9 times 10 you're just going to be ignoring it. You always want to focus on the fourth decimal place, because that'll be, what tells you, the amount of pips that, that pair has moved. And so it's the same thing with any pair that may have the Japanese yen or any commodities such as gold, oil, Brent, and gas. So the only difference is, the pipit is now placed within the third number, the third decimal value. That will be considered your pipit. And so, as I mentioned before, you only want to pay attention to, the second decimal value, because that'll tell you, how many pips you've moved, whether, you move 30 pips, 20 pips, and pips is pretty much like a universal language of telling someone how much increase, the prices move. I believe in stocks, they call it points. So, there's different ways you can name it, but it's pretty much all the same thing. All right, so what is Forex? We're going to talk about platforms. So there's different trading platforms that you can use when you're trading, here when you're trading the Forex market. So one platform you can use is called MetaTrader 4, and this just simply allows you to see the market. Okay, when I say platform, all I really mean is just a way to see the market. I mean, just to see what pairs are going up or down, what stocks are going up and down. And it's pretty simple when I talk about platforms. So a very popular platform would be called MetaTrader 4. A lot of people a lot of people like to use MetaTrader 4 to trade. And it's an electronic trading platform, so you can download this on your smartphone, you can download on your tablet or on your laptop, but you cannot use this on the web. So you cannot type in www. MetaTrader 4 and then view the market from there and use the tools like you can here. So here's an example of MetaTrader 4. So as you can see here, like you have different pairs on the left side, and this is just this is the laptop version of the MetaTrader market, and you can just go ahead and pretty much choose your pairs on the left hand side, and then once you choose your pairs, you can just open them up and see what pair is doing, and you can back test a little bit on here, not a lot. And you can also, use tools and stuff on here. So I can draw out the trend line. I can bring out the Fibonacci levels. You see what I'm saying? You can use a lot more tools here and trade and go from there. So that's pretty much how this is. We'll dive in a little bit deeper as to how this platform works. But this is pretty much the gist of the platform. So here you have like the tools at the very top. The top left part, and then you have like the time frames, and we'll talk about time frames later on as well. And then you have all the pairs on your left hand side, so you have all your foreign exchange pairs, and then you even have like some you even have some commodities and stuff. So that's one platform you can use to trade. Another is called TradingView. And so TradingView is, it's a web service and social network for traders with a platform for technical analysis and fundamental analysis as well. You want to think of it as a Facebook for traders, because you can now actually follow people. You can have followers on here. Let's go to home, and you can have ideas. You can post your ideas. You can have people follow you, all that good stuff. So here are different authors that I can follow, and it's kind of like Facebook. This is like my my streaming data, all the posts that people are posting and stuff. This is like the home page, and then you can even go to your own profile. You can go to your profile, and as you guys see, I have 77 published, 134 likes, 17 followers, 3,000 views, have a reputation around 300. So, and you can also look in detail and see, okay, what pairs do I like to trade, the most, and also what market I trade the most. So I trade 86% of the Forex market, 4% of the cryptocurrency market, and 2% stocks, and 8% of others. So it's pretty much like a Facebook page for traders. Like, I think it's pretty cool. And you can trade on, like, this is a web, because as you can see, like, you have the www dot, the www dot precursors. So that tells you that, you can use it. You can use this platform on the web, but you can also download it on your phone, on your smartphone, and look at the chart from there as well. Now, does anybody have any questions so far? Is everybody good? Is everybody good? Any questions? Okay, I do see one question. Okay, cool. All right, guys. Actually, so what I'm gonna do is, this session is about to end, because this version of Zoom that I'm using is only limited in terms of minutes. So what I'm gonna do, I'm gonna close this session. I'm gonna send you guys a link again in the group chat, and you guys all come back and go from there. I'll see you guys real quick.